bear trap. We are looking at a potential bear trap. I'm going to lay out some information here for you. You can decide for yourself if you think it's actually a bear trap or not. And then we're going to talk about how that may impact Bitcoin, the SPY. And I'm going to bring up one other stock I've been tracking for a little while here. Okay, so first of all, this is the most important chart that you could possibly have up right now. That is the US 10-year bond yield. Okay, this chart right here. I have this on the 2-hour chart right now. There's some special things to note on here right now. One, we've got a head and shoulders that played out. Let me bring that over here. That played out, and it has completed its move all the way to the downside, which was right here, all the way to its downside, which was down here into this structure on the left right there. That's the end of that head and shoulders. So that completed over the last 2 days. All right. But we're getting something of a continuation now, and off of this bear flag down here, right, which was the right shoulder of that bear flag, that still has some room to go down, and we're creating another bear flag right now off of this. So if we go here for the pole for this bear flag would take us all the way back down to the bottom of this structure over here, which is about 4.52, and we've got a bit of a continuation forming on this as well. So right here, this continuation right here, we got another bear flag starting to form right here on the 2-hour chart. Again, if this pole is to play out, we'd be looking at it coming down to 5.32 just off of that bear flag going into another bear flag. Okay, the reason this is important is this is the 10-year bond yield. As this bond yield comes down, the value of stocks generally goes up, and vice versa. This is what was holding us from going up all of December. If you look at this, let me go back here. If we go back here, back in December 12th, this thing started going on a tear on December 8th. And if you noticed, all of December, while this was on a tear upward, all of our stocks were falling for the majority of that time. Okay, giving back all of those November gains. All right, one other thing we're going to look at here. So this is the first level of the bear trap. Also notice we got a rising wedge with this marked with this yellow here that is falling into this white one, which is also another larger falling wedge. We could come all the way down to 4.4 down here on this falling wedge, and we are still in that bearish structure that could potentially go all the way back down to, in a bad spot, all the way back down to 4.19, which would send stocks flying. Okay. The other thing to look at is ISCI money market funds, and we look at this. This was published today. The data is for yesterday, from the week before. Institutions have offloaded $54.95 billion from their money market funds back into the stock market, and retail has yet to follow. So that means that institutions are front running retail, as they always do, and retail will eventually catch up and send the stocks going even a little bit higher. Okay, so what happened today that makes me say that we're in a bear trap? Okay, today. So we've got institutions pouring money back into the market. We've got the 10-year bond yield falling. And today, the stock market fell. It fell by 0.19% today, which, when this thing here, the 10-year, was falling all day long, and I'm talking all day long, this thing was falling, and stocks were falling alongside it, that smells like a trap. We've got that happening. We've got the ICI money market funds showing that money market funds are having money pumped back into the market. Oh yeah, one more thing. The Federal Reserve balance sheet stopped falling. It stopped falling just this month. Between January 1st and January 8th, we stopped falling. We started going back up a little bit. It was a very small amount up, but we're going back up again. And if we go back here, look at this. This was the 2020 injection of cash. We've come back down to be below the peak of that. This is generally where the Fed will start pumping again. And if the Fed is pumping money back into the market, well, guess what happens? Guess where it finds itself? It finds itself in stocks, which is going to pump our stocks up again. So I'm not saying this is going to last forever or anything, but there could be a new highs incoming soon for some of these stocks. All right, we're also at the top of the range for SPY, right? We got to the very top of the range. We rejected a little bit. If we can get above this white line, we go back to 608. Okay, we're going to go back up into the 600s very, very easily if we get above this white line. Okay, and that could start happening as early as tomorrow as we melt up into the long weekend. Remember, Monday is a day off. Markets are closed. Martin Luther King Day. It's also the inauguration day for the new incoming president. So all those things are leading to potentially having tomorrow be a good day. Maybe Tuesday will be a sell-off. I don't know. We'll see. It really depends on how the inauguration goes. And we will likely see a melt up into the holiday weekend. So keep your eyes on that. How's this affecting Bitcoin? Bitcoin is flat. Basically, it's down 0.64%, which again should be going up as the rates are falling. The 10-year rate is falling. Bitcoin should be going up as the ultimate risk asset. Should be going up. And we got a nice little cross up on the MACD here for the daily that we're following. All the momentum indicators are showing upward momentum while price is kind of doing nothing today. I think that today is the marker of a potential bear trap. Okay. Anyways, how did the miners do today? They did badly, I believe. Yep, they all did pretty badly. Look at that. Except Mara was up 0.83%, Corzi was up 0.69%, Hut up 1.26%, Hive up through 0.3%, Soluna up 4.29%, but all the others that I follow, except BitDeer, which was up 3.36%, all the others were down between 1 and 2%, and some 5. Wolf was down 5%. So they were falling down while the 10-year bond was falling down, which they shouldn't be doing that, basically. They shouldn't be doing that. You can also see on this slower MACD here that it is grinding up while price was still falling, which was a divergence, and we're starting to break that divergence now and see price go back up. So, and that's Bitcoin. I bet you it's the same on the SPY too. Yeah, SPY, look, SPY is coming down while the MACD here on, this is a 30-minute MACD, by the way, is grinding higher while the price was coming down, which is a divergence, much like an RSI divergence, and that will break out at some point. Okay. Now let's get on to the stock I wanted to talk about, Qualcomm. Qualcomm did something very, very interesting and important today. This orange line right here, the orange one, that is the 50-day moving average. We did a gap up above that, and then today we opened and closed above that line. That is a confirmed breakout. Okay, that's a confirmed breakout. On the daily, the MACD, we are pointing up, and we have been pointing up and crossed up above it back here on December 23rd, and we've been stair-stepping up ever since. Okay, the 50 moving average, that yellow line there, that orange line at 159.95, that is now the bottom of the range on this stair step up as we make higher highs and higher lows on Qualcomm. All right. Okay. So the next thing we're looking at here is on the weekly. We are getting very, very close to a weekly cross on the MACD. It's taking a little while to load here. I'll keep going on about it. So when we get that cross, we're going to be closer to the end of the move than the beginning of the move, at least for the short term period here. But you can see the week is curling up nice and tight there. And what am I looking for on this? If we go back here, I'm looking for a move up to the top of the range here on the left side here, which would be about 176-ish. Maybe even if we can break out nicely, maybe even to the top of the ATR band here at 192 for Qualcomm. So keep your eyes on that. If it goes back beneath the 50-day moving average, if it goes back beneath that, this is invalidated, but at this time I am looking at potentially going for a long on Qualcomm. And of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. This one's just simply starting to look interesting. I will wait to see how tomorrow starts to play out. Maybe near the end of the day I may decide to go long on Qualcomm. We'll see. It really depends on how the day plays out and what sort of signals are given throughout the day on Qualcomm, but that is one I'm watching right now. It is an AI play. It is a semiconductor play. It is eating the lunch of AMD and Intel. They work closely with ARM and defeated them in court recently. They beat them at that court case against ARM, saying that they were violating their patents. So Qualcomm is actually in a really good position right now to do very well. And it is beaten down. It is really beaten down. Look at this. We're not at the 52-week low, but we're getting pretty close to, I mean, look at this. 6 months ago, we were trading up at over $200 on Qualcomm. In June of this year, we were trading up at 229 of June of this year. Let's see. What about January of 2024? Sorry, June of last year. January of 2024, we were trading at 139, so we're barely above that right now. We're barely above that, and we've just been grinding down in this downward channel for a long, long, long time, and we're finally starting to break out of that. Now, I do think that the 200-day moving average does have a strong resistance up here, so I wouldn't be looking at doing much more than going up to the 200-day moving average up at 175.49 right now. Okay, I wouldn't really expect it to go much higher than that in the short term. Getting back up into the 200s would be a multi-month, maybe even multi-year grind. But right now it is looking like getting above that 50-day moving average is that first step towards making that breakout, going higher. And right now it has unlocked the ability to move up to the 200-day moving average as long as it holds above the 50-day for the next few days. All right. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.